Hey everyone, welcome to this Trading for Beginners full course. Whether you're completely new or just want a solid foundation in trading, you're in the right place. In the next 5 minutes, we'll break down the essentials of trading, how the markets work, and how you can start making smart, informed trades, even if you've never opened a trading app before. Light bulb, don't forget to like, subscribe, and share this with a friend who wants to learn trading the right way. Let's dive in. What is trading? Trading simply means buying and selling assets in financial markets, like stocks, forex, gold, crypto, or commodities, aiming to make a profit. There are different types of trading. Day trading, buying and selling in one day. Swing trading, holding for days or weeks. Scalping, super short-term trades. Long-term investing, holding for months or years. As a beginner, you'll likely start small and build up. Don't worry, we'll cover risk and strategies soon. How financial markets work. Markets move because of supply and demand. That's it. But what affects supply and demand? News, earnings reports, global events, and even emotions. Here are the key markets you'll hear about. Stock market, companies like Apple, Tesla. Forex market, currency pairs like EUR, USD. Commodity market, gold, oil, silver. Crypto market, Bitcoin, Ethereum, etc. These markets operate through platforms called brokers. We'll explain that next. What you need to start trading. A broker account like MetaTrader, TradingView, or other apps, a charting platform, where you analyze the markets. A basic strategy, a good risk management plan. Start with a demo account to practice with fake money. Don't rush into real money until you're confident. Many brokers offer apps with real-time charts. Always check regulation before choosing one. Technical versus fundamental analysis. This is where trading gets powerful. Technical analysis, using charts, patterns, indicators, like RSI, MACD, moving averages, to predict price. Fundamental analysis based on real-world news, economy, interest rates, inflation. Example. A company's earnings are better than expected, stock may go up. USD interest rate hikes, USD gets stronger. Most traders use both, but technical is more common for short-term trades. Psychology of trading. This might be the most important part. Fear, greed, overconfidence. These can ruin your trades. Stay disciplined. Set stop loss. Never risk more than 1 to 2% per trade. Don't chase losses. Keep a journal of your trades. Review it weekly. This is what separates winners from gamblers. Risk management equals survival in trading. Don't trade with your emotions. Always calculate. Lot size. Risk-reward ratio, ideal. 1 to 2 or better. Where you'll exit if wrong. Stop loss. Never put all your money in one trade. Even pro traders lose some trades, but with good risk control, they stay profitable. Let's build a simple plan you can follow. Trade 2 to 3 times a week. Risk max 1% per trade. Focus on 1 or 2 markets, like EUR, USD or gold. Use 1 to 2 strategies only, e.g., trend following or breakout. Journal everything. Keep it boring and consistent. That's the key to long-term success. Best tools and resources. Here are some free, paid tools to help you grow. TradingView, charts and backtesting. MetaTrader 4/5 trade execution. MyFXbook, track your trades. Investing.com, market news and economic calendar. Books. Trading in the Zone, The Disciplined Trader. Keep learning. Never stop studying the market. Outro and call to action. You made it to the end, well done. Trading isn't a get-rich-quick scheme, it's a skill. And like any skill, you get better with practice. Start with a demo account. Focus on learning, not just earning. Join trading communities for support. If you want more tutorials, strategy videos, subscribe and turn on the bell. Got questions? Drop them in the comments. Thanks for watching, and happy trading.